What if I told you that right now there are banks approving brand new businesses for $50,000, $100,000, even $250,000 in business credit, and they're not asking for tax returns, bank statements, or proof of income? Sounds fake, right? But this is actually how smart business owners are getting funded every single day, and in this video, I'm going to show you the exact banks they're using, the mistakes that can get people denied, and how you can qualify even if your business barely makes any money yet. And make sure you stay to the very end because I'm going to break down which business credit cards you should never apply for if you're trying to keep your personal credit clean. What's going on, guys? If you're new here to the channel, my name is Mike, and on this channel we talk about business funding and credit and how you can use the bank's money instead of your own to scale. I've personally used these strategies to secure high limit credit cards, and I've helped people just like you get access to funding even when they thought they couldn't qualify. So if you're serious about growing your business, hit the like button and subscribe. Let's get into it. First, let's talk about what business credit actually is. Business credit is funding attached to your business instead of you personally, meaning you can access large amounts of capital for your business expenses while protecting your personal credit profile. And this is why business credit is so powerful. Most personal credit cards will cap you somewhere around 10, 20, maybe even 30,000. But with business credit, you can stack multiple approvals and get access to six figures in funding. On top of that, many of these cards come with 0% interest for 12 to 18 months, meaning you can literally use the bank's money interest-free to grow your business. You can use it for marketing, inventory, equipment, payroll, travel, pretty much anything business related. Now, before we get into the best banks, let me clear up two huge myths. Myth number one, you need to build business credit before you can get funding. False. If you have decent personal credit, most banks will approve you based on your personal credit profile, especially if you're personally guaranteeing the account. Myth number two, you need to be in business for years before getting approved. Also false. A lot of these banks will approve brand new LLCs as long as your personal credit looks solid. So what do you actually need to qualify? Ideally, you want at least a 680 to a 700 credit score, low utilization, under 30% if you want to be clean, under 10, and no recent late payments or collections. If you're sitting around that range, you're already in a good position to start applying. Now let's get into the banks. First up, we have American Express. Amex is one of my favorites because they have the Apply with Confidence feature, which lets you know if you're approved before they do a hard pull on your credit. Their Blue Business Plus and Blue Business Cash cards both come with 0% APR offers, and Amex is also known for growing with your business over time. Many people start with smaller limits, but every 91 days, you can call and request a credit limit increase, and some people triple their limits doing this consistently. Next, we have Chase. If you want high limits and premium business cards, Chase is definitely one of the top banks. The biggest thing with Chase is relationship banking. If you already have a business checking account, your approval odds usually go way up. Another big advantage is business cards typically don't count against Chase's 524 rule, which is huge if you've opened a lot of personal cards lately. Next, we have Bank of America. Bank of America has solid 0% APR business cards, and they're also very relationship based. If you already bank with Bank of America, they tend to look at you more favorably during underwriting. Plus, they allow multiple applications with minimal inquiries in some situations, which makes them a strong option for stacking funding. Next, we have Wells Fargo. Their business cards are underrated, especially for newer business owners. They offer solid cashback options with no annual fees and 0 APR offers. If your credit profile is clean, Wells Fargo can be a great starter bank for business funding. After that, we have US Bank. US Bank is more conservative, but if you build a relationship with them, they can become extremely valuable long term. They're known for offering long intro periods, sometimes up to 18 months with 0% interest. A lot of smaller regional banks also use the same underwriting systems, so understanding how US Bank works can help you in the other approvals too. And last but not least, we have Truist. Truist is one of those sleeper banks not a lot of people talk about. They offer competitive business credit products, and depending on your state, they can be easier to get into than some of the larger national banks. If you're able to establish a relationship with them early, you can put yourself in a strong position for future funding. Now let's talk about which business cards you should avoid. Some business credit cards actually report directly to your personal credit, which defeats one of the biggest advantages of business funding. 3 you want to be careful with are Capital One Spark, Discover Business, and TD Business cards. If your goal is to scale business funding without hurting your personal utilization, you want to stay away from cards that report balances to your personal profile. Now, some of you are probably thinking, okay, this sounds good, but what if my credit isn't perfect? Well, I still have good news for you. Even if your score isn't in the 700s, there are still options available, especially if your business is generating revenue. A lot of lenders care more about cash flow than tax returns, and there are programs designed specifically for business owners with challenging credit. The key is understanding which lenders fit your situation instead of randomly applying and stacking denials. If you found this video valuable, make sure you like, subscribe, and comment which bank you're thinking about applying with first. And if you want to learn how to structure your business the right way to maximize approvals, stay tuned because I have more videos that will break down the whole playbook for you. I'll see you on the next one. Peace.